All right, let's go into the stocks that you've done your work and due diligence on. Let's get into your pro picks. Pro Picks is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. Okay. Love these picks. First of all, these are kind of down names. So already, that's my toxic trait is I love stocks that aren't participating in the market rally to see if there's an opportunity. And I'm down on a couple of them. So I'd love to know if there's a silver lining. Your first one is Nike. Why do you like Nike here?
Well, so I'll say that Nike is a name in full disclosure that we have started to build a position in within our portfolio. And the reason being is, why would someone want to own Nike, given the challenges that the company and the stock price has been faced with over the past number of years? And I would say that you look at a price chart of Nike and it's been pretty ugly, but, circle back to Nike, arguably one of the most globally recognized brands out there, whether if it's the Jordan lineup, the relationships with a number of other sports stars, such as Serena Williams, Ronaldo, who's got a big capture in the European markets. But what I think you've seen is a number of the challenges that Nike had faced for the past, 2, 3, 4, 5 years, such as a massive inventory buildup. And I think they kind of got a little bit off track with where their focus is with some of their core lineup and some of their core products. And I think what you're seeing is this kind of resurgence of the stock and a new structure. I think the new strategy is called Move Now or something like that, where they're really focusing on what the core is of Nike's business. They continue to work through a lot of their oversupply and inventories and kind of refurbish their relationships with a lot of their wholesalers. And as I said, focus on their core business. I think the most recent quarter that we saw coming out in September was the first year that you actually saw year-over-year improvement on earnings. Now, that's just kind of maybe a small green shoot, to use that term that you've seen with Nike, but I wouldn't be surprised that over the next couple of quarters, you continue to see some earnings improvement on that side of things. And I would consider it a turnaround play. This isn't a contrarian call for us. I think you're starting to see a fundamental change for the company and, again, a refocus on what they do best.
And, some people say, I'm not asking a stock to go where it hasn't been before. This is a stock trading at $68 a share. 2021, is above 160. As you kind of do the math, does it get back to those levels? Are you asking it to go back there? Or do you think even if it goes back to, 100 where it was like in 2024, that's kind of a win?
Well, ultimately, yeah, we'd love to see the stock price at 100 or retest new, all-time highs. That will prove our conviction on the stock was correct. I think it's a name that we're looking at accumulating. It's not a full position for us in our portfolios, but I think it's a name that you can start accumulating and look to add to it if you see confirmation and the market is reacting well to it. So, it's still got some of the headwinds. I don't think that's changed. What does a consumer do if we continue to see, if we see some weakness amongst the consumer? Well, hey, it's probably going to be a bit more of a challenging market for a company like Nike, and I'd argue for all consumer discretionary names. So I think you need to be a bit patient with the name, but we have no problem accumulating it here, Amber.
Okay, let's talk about your second idea, which is Intact Financial. And people really love Intact, and they love this sector in general. And yet, it's kind of trading at the lowest level since February. It's down about 20% from its peak a couple of months ago. Before you tell us why you like it, help explain why has Intact suddenly drifted lower?
Yeah, I think the main driver is coming out of their earnings, which I think came out in June or July of this year. And despite some pretty good numbers across the board, and I think they saw some weakness in Europe, but the Canadian P&C market was pretty solid. The U.S. market, I'm going to say, is kind of it's chugging along. It's marginally improving, but I think bottom line, what you saw, Amber, is the market is a bit hesitant on forward guidance and what the outlook is for the insurance company itself. So, that's, I think, is probably 90% of the structural issues that has caused the stock to trade where it's at today. I think maybe last week, more recently, you saw a bit of a blowback on some weakness across the broader insurance sector in the U.S. And I think that filtered in to some hesitancy in the Canadian insurance side as well.
So now, why do you like it? What do you see as the opportunity here going forward?
We've owned the company for, probably more than a decade now. I dare call it a utility, but the insurance business is a pretty static business where, as I mentioned, the Canadian market, you've kind of seen mid to high single digit growth rates on the P&C side of things. Their underwriting remains extremely strong with profits. I think year over year up kind of 14, 15%. As I said, the international segment continues to see some tailwinds as well. And I just really think they are a global leader on the insurance side of things. And probably steered by some of the strongest management within the insurance side of things here in Canada and globally. So it's pretty tough to bet against the company itself. I would be accumulator of the stock here at these price, and I would probably look at doing that within our portfolios as well.
You're right that the UK kind of proved to be a bit of an issue last quarter, even though headline results were decent. UK, I guess it's a growing piece of the pie, but it's still majority driven by what's going on in Canada.
Yeah. At the end of the day, the team at Intact, they continue to execute on their strategy. If they saw a bit of weakness in one quarter, what have you, I don't think that's a reason to run for the exits for, again, a company that's well managed, that executes on their strategy, and they'll find ways. If they see weakness in the U.S. or the international markets, they'll find a way to right that ship as well. So again, I've no issues, as I said, buying the stock at these levels.
You've got your third pick in Tourmaline, and that's super. I wanted to hear your reasons why. And we just interviewed Mike Rose, an in-depth interview last week. So if people hear what you say about Tourmaline and want to learn more, we've got that interview up on our page right now. Talk to me about why you like Tourmaline, another stock that is languishing.
Yeah. No, I actually, in all fairness, I did see that you had interviewed Mike Rose, and ironically, we had started building a position in Tourmaline, I think about 2 weeks ago. So before the interview, so maybe our timing's pretty accurate here. But I think Tourmaline, without a doubt, probably the preeminent leader within the Canadian natural gas landscape here in Canada. Largest producer of natural gas, and I think they're the third or fourth largest midstream operator here in Canada. What we like about the company, first and foremost, management. I'm going to say they're probably the bench strength of their management team is best in class here in Canada. And you've seen that, with a lot of the mergers and acquisitions that they've seen over the last number of years. Maybe the market's been a bit hesitant on the stock, which is why it's probably traded sideways for the better part of 2 to 3 years. But you look at all of these strategic tack-ons that Tourmaline has seen. At the end of the day, it's our belief that it's only accretive to the stock. And you look at their plans on this Northeast British Columbia build out. Their production expectations, I believe, over the next 3, 4, 5 years, takes it from 600,000 billion feet equivalent a day to, to where they are. I think a 20, 30, 40% increase on that. So the company itself is a free cash flow generator. They do offer a quarterly dividend, and I think they do offer a special dividend, which is on a one-off basis here and there. But I just think the backdrop for natural gas for this company in particular, and the electrification and the demand that you're seeing from AI and these data center buildouts, I think that's only a massive benefit to not only Tourmaline, but I think the Canadian natural gas sector.
Well, and he spoke to all of those issues. In fact, I asked him, when are net gas prices going to get better? And he's like, in 4 weeks. And he was being serious because he said winter is coming. So they've got winter. They've got some offtake, with LNG Canada going. So that allows Tourmaline to kind of come in and fill in that demand that from the supply that went elsewhere because of LNG Canada. And he talked pretty candidly about the spending plans, which I think made people nervous, right? They were worried about, well, then does that mean cash flow isn't coming back to me? You mentioned those dividends. And, it comes full circle. Canadians do love their dividends and their payouts, and they want to know that's growing.
Yeah, I'll default to the team there. I don't think it's wise to second guess the management decisions of Mike and his team. Is there hesitancy or fear of what they're doing? I don't have those. I don't share those same thoughts whatsoever. I have full faith in what the management team is doing, and I think at the end of the day, you're going to see that. You maybe got to be patient, and you look at 27, 28 into 2030, what that does for top line revenue and bottom line earnings. I think you want to own this company. And as I said, if you continue to see this massive AI build out, I think it's tough to challenge yourself to see how that can't be beneficial to the likes of Tourmaline, as I said.
Craig, it's been an absolute pleasure. Thank you so much for taking the time and sharing all of your insights with us.